Hello and welcome to The What Seat, produced by our media and membership business, A Word About Wind. My name is Adam Barber. I'm Managing Director of A Word About Wind's parent business, Tamarindo Group. In this interview series, we are shining a light on some of the often unseen individuals that work tirelessly behind the scenes to power future global renewable energy finance, development, and investment. The format of the interviews is dead simple. In each episode, we'll introduce you to a key decision maker within our global membership community. We'll ask each person just 6 quick-fire questions as we find out what makes them really tick. For today's episode, I am delighted to be joined by Stuart Brown, Head of Origination, Weather and Energy, EMEA, Asia Pacific at Swiss Re Capital Markets. Stuart, welcome to the show.
Thanks, Adam. I should warn you, there may be a little bit of problem with the sound. You're a little choppy, but let's see how we go. Okay.
Can we blame it on Brexit yet, Stuart, or is that is that one step too far?
No. Say again. Sorry.
Very good. You're well prepped. So, Stuart, listen, for those of you within our audience that perhaps don't know you, can you just give you a brief introduction to your role at Swiss Re? And I suppose also kind of your introduction to the renewable markets, like what brought you into the renewable markets in the first place?
Sure, Adam. I probably come to this series with a little bit of a different take or a little bit of a different background from most of the people who are more directly involved. I'll confess at the outset, I'm not a full-time wind person. What I do is I work in a part of Swiss Re that sells weather derivatives. We sell weather protection. Swiss Re, for those of you who don't know, is a very large international reinsurance group, a large international insurance company, provides corporate insurance. And as part of that business, we are also, little known fact, the world's largest dealer in weather derivatives and weather protection. What's that? That's simply, we write protection contracts, swaps and options around indices that have to do with temperature, rainfall, wind, and sunshine. That just means, that's kind of a fancy way of saying we pay people if it's too hot or too cold, too much rain, not enough rain, too much wind, not enough wind. And wind is, because it's a hedgeable weather commodity, it's part of that mix. And that's how we get next to the wind business.
So where does the sort of the wind business, and I guess the kind of the renewables business as a whole, where does it sit with this kind of dynamic around, well, you know, if the wind doesn't blow and the sun doesn't shine, you don't get your power, as it were? I mean, it's been one of those, you know, the market is still relatively young, right? It's 25 years really at that point. And I suppose it's almost built in to the fact that you're developing a project that it won't always, you know, kick out power. Like what's the traditional relationship? Like where does that, if this was a combined cycle gas plant, you know, it's very simple operating point, right? You know that, you know, if the project dips, then it's, you know, there's some malfunction or, you know, there's something, you know, major going on there. But when you're dealing with the dynamics of purely the weather, it's a very variable commodity. I mean, how have developers and investors dealt with this before hedging products? Like, where do they sit on that profile?
Well, I should say that the product has never been taken up as a mainstream hedging activity for most wind producers. And it's only recently gotten a little bit more traction with people who are involved in the wind business. Maybe the best way to think about it is it's like hedging your fuel. If you're a combined cycle generator, you have to think about where your fuel's coming from, right? Well, wind in this case is your fuel. You've paid for all of the kit up front, essentially. You don't have marginal costs to hedge, but what you do have is a big risk about when the wind will arrive and in what quantity. And so in some ways, producers might think about this as a way to hedge their fuel risk.
That makes sense. And I suppose there's an education element to that, isn't there, in terms of like how you work with an investor and a developer much earlier in the cycle to kind of understand that dynamic and kind of why it's important to them. Can you give me a sense of kind of how this product has performed, like how that education process has translated, as it were, like, because I know that you've had a couple of notable successes within this market. Perhaps you could talk about kind of why those particular projects were so effective and sort of well geared for this product.
Adam, I'm partly understanding the question. I think you asked me about, and you can give me a thumbs up if you like. I think you asked me about the education and the learning process by which the industry has gotten introduced to what we do. Got it.
That's correct. Yeah.
Okay, fair enough. I think the learning process, in many ways, and surprisingly, has just kind of barely started. And let me tell you what I mean by that and why I think that's the case. When we got into the business 6 or 8 years ago, what we thought we'd be doing was to hedge producers' medium and long-term wind risk. We figured that if you could take the variability risk out of a wind project, you could take that to your debt providers. Debt providers would give you more leverage that creates value that pays for the product.
Yeah.
It didn't work. And it took us a while to realize that actually, if governments are paying you 150 euros a megawatt hour to produce wind when, as, and if it gets produced, then you're not really all that worried about the variability because there's plenty of margin in that price to make a lot of money.
Yeah.
So the wind business never got into the habit of hedging the long-term risk. They're still not. It's still fairly rarely used. But what we have seen emerge in the last 2 or 3 years is the use of wind hedging by people for shorter term needs.
Yeah.
So who's that? That's the wind producer who wants to lock in through a PPA for 2 or 3 years, some shape and profile hedging. That's a producer of electricity in a system that gets affected when there's a lot of wind in the system and the spot price responds, or the wind goes down and the spot price goes up.
Yeah.
So we've seen hedgers use those techniques to manage portfolios that don't necessarily have 100% wind.
And is that, just so I understand the dynamic of that buyer, as it were, is that when you talk about the sort of it's the PPA over a sort of a 2-3 year life cycle, is that what type of PPA is that? Is that a utility PPA or is that a corporate PPA, as it were? Because I want to understand why they wouldn't want to hold that risk on their own balance sheet.
What would induce a corporate PPA buyer or seller not to hold that risk?
Yeah.
Pretty simple value calculation. If they find that by paying somebody else to take that risk away, they can get better numbers on that transaction, then they're going to do it.
Yeah.
If, for example, you're a power producer, you've got a generation portfolio that's right across the stack, right across the merit order, and you've got a 6-month exposure to power prices, you like the exposure. The one thing you're worried about, say, might be the unpredictability of wind.
Yeah.
Well, these guys will look for hedge prices, be in and out of that market, and it's not actively traded, but transaction by transaction, they'll look at that and say, does that improve my position? So it's not really a traded market, but in a lot of ways it's used by power traders in the market.
That makes sense. And where you talked about the fact that sort of, the wind market has been sort of being sort of relatively slow on the uptake. I think it was your words with regards to this product because they've not traditionally used it. How do you expect that to change? So if you look ahead to the next 12 months, how are you prioritizing this product and kind of where do you think, what is the time horizon for adoption?
Well, I think the time horizon for the options themselves, the products themselves, go out as short as a month or two, as long as 3 or 4 years.
Yeah.
we've seen longer term wind hedges, and the market can hedge the wind variability itself.
Yeah.
But most of the time, producers want both a hedge of the wind variability and the power price risk.
Yeah.
So they'll want to be taken out of the uncertainty of all the revenue. And of course, that's driven by what's the uncertainty of power prices and what's the uncertainty of wind. And that term is a lot more difficult for the market to produce. There have been some successes, but fundamentally, taking long-term power price risk is not something that really anybody in the world is ready to do. So we're really talking about hedge products that run from as short as a month to as long as 3, 4, and 5 years. That's more the mainstream of where that's applied.
Yeah. And in terms of the outside of the product, in terms of kind of wider market adoption, how do you predict that will change, Stuart? So
I think you'll see more take up of production hedges, because as you go further and further away from heavily subsidized price markets to much more merchant and price risk in developers and their transactions, or for developers in their transactions, I think they're going to be taking a harder look at this. That hasn't been tested so much in Europe over the last really 2 or 3 years because there's been such a slowdown in development spending in new wind farms. But I think as that restarts and reaccelerates, then I think you're going to see more producers recognizing this. One of the interesting things that we're watching and trying to do is to get the information out more than we already have. One of the things that surprises me in talking to the industry is there's still an awful lot of people who don't know that this is a manageable risk.
Yeah.
And because of that, and because it takes quite a while to get acquainted with the products and how much they cost and try and work out whether that's beneficial, it's still early days. I would say if you give the business maybe another 3 years, you're going to have more exposure by people who are in the development business to wind hedges. The other thing that is going to matter is the increased use of PPAs. And I think the tools are going to get more and more sophisticated in stitching together ways to hedge the uncertainty in shape and in volume.
So in other words, you might have a market for, a growth market of corporate PPAs within the Scandinavian market, for example, that attracts a certain type of off-taker, as it were. And actually off the back of that, there is a risk portfolio attached to that off-taker that you can model a weather hedge around. Is that what you're saying? So you kind of end up with a custom.
I think that's a good way to think about it. I do believe that this is going to be more of a, how should I put it, more of a professionals or traders hedging tool than it is going to be what investors look for. Because you now have an investor community around the world that's very familiar with the uncertainties around wind risk. So it's unusual to find someone paying to have that taken away. They pay the risk in their investment return, and they understand it, and a lot of them are perfectly happy to take that. But the uncertainty of what happens to a power price portfolio or a generation portfolio when wind has an extended period or an unexpected period of strength in a wind system and spot prices take a hit because of that, I think that's where the market is going to grow.
Have the trading teams, you sort of talk about the adoption on, the trading teams need to be able to understand that product. Have they experienced enough pain, yeah, to be able to sort of want to sort of have they experienced enough pain to drive them towards the product, or do you see what I mean? Like, because there has to be a push and a pull.
No, I do see what you mean, and it's that's where the education comes from, right? You're wounded, and you go, and your board tells you you need to find a way to fix that.
Yeah.
So that's
Yeah.
exactly where the pain comes from, and I think as we've watched the impact of wind in and out, particularly with demand down, as it has been this year, as we've watched the very high impact of wind uncertainty in spot prices in systems like Spain, Germany, the UK, then we're seeing that. But where we see that pain emerge is more inquiry that's coming our way.
Again, forgive me if we can't go down this route, but I'll just double check I think I'm right in thinking that one of your early wins was in Australia. Was that right?
Yes, that's right. Yeah.
Can you just give me a little bit of can you give our audience a little bit of a sense of kind of what that project was, and I guess why they adopted that product at a relatively early stage?
Yeah. Well, it was interesting. We thought that was proof of concept. Come alive. What we did, Adam, this goes back about 4 or 5 years, but there was a producer, investor, developer in Australia, and we hedged 550 megawatts of his production across about 6 different sites for a year. And that was successful. It was a very successful transaction for them. We paid out something like a 4 million Aussie dollar loss because it was a hedge against bad wind year. They had a bad wind year, so they got paid. We thought, okay, this will be great to market from. People will learn from it, and this guy will be back. Actually, as it turned out, their interest was kind of idiosyncratic. We didn't know it at the time, but they were under more cash flow pressure than we had realized.
Yeah.
They were close to breaching some of the covenants in their bank debt. And so they were in a situation where if I have another bad wind year, I'm dead. So that prompted them to do the hedge. When that pressure went away, they didn't come back for more. Again, we thought this was going to be the poster child from which 1,000 hedges would bloom, and it didn't turn out that way. Unfortunately, we went back to a world where most development and most secondary market trading of wind portfolios was done without any kind of hedges.
Interesting. The dynamic on kind of what drives them towards the product, whether, about sort of whether or not that is a case, whether that is kind of proof, like kind of a point where others will follow, or whether or not it's an exceptional circumstance, is a very interesting dynamic in terms of kind of where that growth is going to come from, Stuart. And that early adoption comment, particularly interesting in terms of, where they were in the cycle. Can you just give me a sense of the sort of this, you've been an advocate of the hedging business for, as I say, for as long as I've known you, Stuart, which has, been some time now. Can you just give me a sort of sense of the sort of the point at which where you think we will hit that tipping point with this market, because from the investor perspective, the investors have always been fairly bullish about saying, look, it's our business to hold the risk. We will, we'll as the investor in the project, will take that risk on whether or not the spot price is going to be up and down, as it were. And as we all know, it's much more complex like that than that, as you've identified, particularly with the trading market. But how long do you think that education is going to take? And realistically, if we sat down in 12 months, Stuart, how far do you expect the market to move during that period?
Oh, I think if we sat down in 12 months, I think we'd probably find that there were still just a handful of medium to long-term hedging transactions designed to enhance returns and designed to make wind uncomfortable investors happy with what they're doing. I really struggle to see that becoming a mainstream part of the wind business. I think what's going to be more mainstream is the use of hedges in medium-term PPAs to address profile risk, and also the kind of trading applications that we've seen so far. It's interesting, Adam, the inquiry that we've had has come not so much from the wind community, but from our regular weather hedging clients.
Yeah.
What we do for a living is, by and large, we protect utilities against warm winters or aggressively hot summers and the consequences that go with that. And so the people that we trade with get inquiry inside their shops from the people that they sit next to on the dealing floor and on the trading floor. And they come to us and say, I think I could probably manage this risk with a wind product. Could we take a look at that? So I think that's going to continue to be the genesis of where we get the inquiry.
Yeah, it's going to be very interesting, and it sort of does, that sort of the focus and the role of the evolving role really of the utility as well is going to sort of sit central to that in terms of how they control that offtake, particularly from some of those major offshore projects. Conscious of your time, Stuart, so sort of very briefly, within the markets, both sort of within the wind markets, but I think probably more widely within investment, finance, insurance, etc. What's the best piece of advice you've been given then along the way, as you're a great one at kind of developing these products and these initiatives? What's the best piece of advice you've been given?
Oh, just commercially, the best piece of advice we've been given around the product is don't talk about what it is or how the product works. Talk about what it accomplishes. Talk about what the benefit is.
Yeah.
Talk about and be very candid and honest with yourself when a client looks at it and says, sorry, at that price, I'd rather keep the risk myself. Yeah. Most of the time, if that's the conclusion that they come to, that's the right decision for them.
Yeah.
So they're probably not wrong when they think that.
That's very interesting. I think you could apply that to a lot of markets, Stuart. And then finally, give me one piece of an interesting fact or a little bit of an insight into yourself, Stuart, that perhaps no one would suspect.
Well, I suppose, I could talk about the fact that Brexit has sent me for a kind of a strange reason over to Luxembourg, which is where I live.
Right.
But I think a lot of people know that about me. Sorry, you did break up there at the back a little bit, Adam. Are you asking about sort of an interesting personal
fact into Stuart Brown, the hidden Stuart Brown? What do we know? We've had trumpeters, we've had downhill skiers, we've had bread makers, we've had, what is it, Stuart? Where would we find you if it wasn't at your desk?
Sorry, try again. I can't.
Where would we find you if you weren't at your desk? Where would you be?
Again, I'm sorry.
That's no problem. It's no problem. It's where would we find you if you weren't at your desk?
Where would you find me?
Yeah.
If I weren't at my desk, you'd probably find me. You'd probably find me playing in the kitchen, coming up with something fun for dinner.
I like it. Very good. Excellent. Well, you're cooking the next time we see you then. Stuart, thank you for joining us. I appreciate it. And audience, if you like this format and you'd like to find out more about our future program of quickfire Q&As, our webinars, roundtables, reports, conferences, networking drinks, private dinners, the lot, or indeed, if you'd like to come and join me as my next guest here on the What Seat, do get in touch with the team. You can do that by emailing membership@tamarindogroup.com or make a note of the numbers on screen now. Stuart Brown, Head of Origination, Weather and Energy, EMEA, Asia Pacific at Swiss Re Capital Markets. Thanks for joining us.
Thanks, Adam.